Consumer sentiment is at its lowest point ever, and it's been trending lower. What does this tell us about the future of the stock market? I've got that and more coming up. My name's Mike Bernard. I'm the host of the Wise Money Show. I'm also one of the certified financial planners right here at Korhorn Financial Group. Make sure you hit that subscribe button, turn on notifications, and smash that thumbs up button. All right, the University of Michigan publishes their Consumer Sentiment Index each and every month. It's a survey that they ask a few hundred people about, hey, how you feeling about your overall financial situation, the economy, and so on. Guys, it's been in a downtrend, unbelievable downtrend. If you think about it, as we emerged from the COVID shutdown, the economy, as we were reopening, it was careful, okay, I can't really travel, I can't do some of the things that I want. But we went from like a gradual reopening to just a boom in the economy. People wanted to spend money. People were raising their hands saying, I'd like this good or service, and they couldn't even find it. The economy was so strong. That's what makes this current contraction and GDP recession so perplexing, because we went from like surprising, overwhelming, surging growth in demand to just stop, okay? So interestingly enough, though, sentiment was on a steady decline and has been on a steady decline. Take a look at this chart. We are currently now, guys, at the lowest level ever for this survey, which goes back to, this is directly from, so the chart directly from the University of Michigan Sentiment Index, going back to the 60s, the 1960s. We are at the lowest point ever, lowest ever compared to about the last time we were facing this level of inflation. That's interesting. What was the high point? Right at the tech bubble. Right before the tech bubble burst, everything looked, was rosy. Things were better. Things were booming. Couldn't get any better. The consumer was feeling great. And then, of course, we plummeted during 2008, the great financial crisis. Would you believe me if I said we are lower? The consumer, on average, we feel worse right now about the economy and our own finances than even at the worst point of the Great Recession. Very, very interesting. As this has declined, if you pay attention to financial and economic headlines, this has been all over the headlines. Oh, but house prices are high again, interest rates are going up, but consumer sentiment continues to fall, blah, blah, blah. I haven't paid much mind to it because I've been wondering the question, what does this have to do with where the market's going and what you should be doing with your money? Okay? Well, that's an interesting question, but let's make a clear point, okay? There's a difference between leading indicators of where things are going and lagging indicators. Let's take a look at some of the questions that are asked in the Consumer Sentiment Survey. Things like, would you say that at the present time business conditions are better or worse than they were a year ago? Okay, an interesting question. Would you say that you and your family are better off or worse off financially than where you were a year ago? Do you think that a year from now, you and your family living there will be better off financially or worse or just about the same? Many of these questions, yes, that last one was kind of forecasting. There's a few more that, okay, where do you think things will be a year from now? Most of us just take our current situation and assume it's going to continue on that same trend. And when you compare it today, those first couple questions, compare your financial situation today to a year ago, it does feel financially more challenging. I was hoping to move. Gosh, it's harder now. Houses are more expensive today than they were a year ago. I was hoping to move. Mortgage rates, are higher today than they were a year ago. I go to the grocery store all the time. Prices today are higher than where they were a year ago. And then the questions of, do you think it will be better a year from now? As human beings, we just assume our current trajectory will continue in perpetuity. So therefore, gosh, if the price of meat or poultry or whatever is more expensive today than it was a year ago, it's probably going to be more expensive a year from now than it is today. So things are going to get progressively worse. This, I'm pointing out, I believe the Consumer Sentiment Index, while might be important as a gauge of the overall feeling and mood of the consumer, which is very important since they represent 70% of the overall economy, 2/3, it really doesn't tell us much about where the stock market's going, because the stock market's a leading indicator, consumer sentiment a lagging indicator. Therefore, what does this Consumer Sentiment Index How does it help us? What does it tell us? Does it tell us anything about where the market should be going or the financial decisions that we should make? Up until just recently, I've sort of thought, yeah, no, not really. It's helpful to understand the mood of folks. And yes, the lower it goes, maybe the less likely people are willing to spend money, take risk, and do these other things that help expand the economy. And so it might have an influence on the economy, but possibly not until I saw this chart. This is that same consumer sentiment index, and this one is not going all the way back to the 60s, just going back to 1970, but with some additional information on it by the great folks over at JP Morgan. And there's an important box. Before we talk about some of these blue dots and what they mean, take a look at that box that summarizes it. That box in the upper left, that rectangle, on average, 12 months after the 8 sentiment trough, so that bottom, that low point in consumer sentiment, when consumers were feeling the most bleak, the most pessimistic, the most negative, the 12-month return on average of the stock market was nearly 25%. Compared to the 8 peaks when consumer sentiment was great, when the consumer was feeling so confident and great about the direction of the economy, 12 months later, on average, the return was just 4.1%. Now I'll take both of those, but obviously it's not even close. It's not even close. Take a look at some of these inflection points and just look at that average. The average consumer sentiment, a reading of 85.6. Immaterial. We don't care about that number. But the points when consumer sentiment was the highest, when it was above, look at those future returns, the 12 months later. Negative 6.2%, 1.2, 13.5. That one's pretty good. January of 2000, 12 months later, the market was down 2%. Positive 4, negative 4.2, negative 2.7, and then February of 2020, that's the anomaly where the market was still up 29% 12 months later. Now that is interesting. That tells us a little bit about the unique time period we've been in. But most of those 12-month returns off of those high points aren't that spectacular. What about at those low points when consumers on average are saying things aren't good? I don't feel good. I feel like things are going to be worse a year from now. I feel like things are worse today than they were a year ago, and they're going to be worse a year from now. 22% rate of return over the next 12 months, 20%, 29%, 32%, 14%, 22%, 15%, 43% over the next 12 months. That is fantastic. So here's the takeaway. Financially, when your mood is pessimistic, when it's bleak, when your outlook is not rosy, it's actually negative, that might be the exact time when the future return to the market could be the best, could be the most appealing, the most attractive, is when you're feeling the worst. So I said earlier that there's a difference. The stock market's a leading indicator. That when things are, when you're feeling a certain way, the stock market's already moving. If you're feeling negative, the stock market could already be moving, anticipating and expecting things are going to start getting better. Things are great, the stock market's already moving, starting to decline, saying, nope, we're actually about to reach a soft spot. The stock market's a leading indicator. Consumer sentiment's a lagging indicator. And what does that mean? That means consumer sentiment is a contrarian indicator. Oftentimes, it reveals the opposite of what you should be doing. When you're feeling the worst, that typically means the action you should take is the opposite. When you're feeling the most optimistic, that often means you should do the opposite and start being careful, cautious, and pessimistic with your investments. This is very, very interesting because we are at a point right now where, yes, the stock market returns have been very disappointing over the past year. I feel that as well. Certainly the clients that we serve feel that. I know you feel that as well. And what you feel based on your overall financial situation, the economy, things are not good, and they're likely, they very well could get worse. This might be based on, and history is no guarantee of future results. However, based on this, it certainly could be a very appealing time to be an investor, or certainly a time when you don't want to bail out on some investments, because based on history, when the consumer is feeling the most pessimistic, the future return is actually higher than when you're feeling the most confident. Stay the course. Don't be overcome by emotion. Make too many changes to your investments. Work with your certified financial planner. Make sure you're taking the right investment risk for your overall situation, for your overall financial plan. Make sure you're using the right strategies to manage that risk through good times and bad times, even if this gets worse before things get better. Work with your certified financial planner, and just have as a reminder that when you're most concerned about the condition of the economy, that typically is the time that's darkest before dawn, the time that might be, well, the recovery's right around the corner and you just can't see it yet. Work with your certified financial planner. If you don't have a CFP on your team, you can contact one on my team. Find us online, Korhorn.com. That's Korhorn with a K. WiseMoneyShow.com. You can find us there as well, or give us a call, 574-247-5898. All right, there you have it. Go out and take your next wise step in your financial life.